after 10:30 in Honolulu, 3:30 in New York on Monday, 2nd day of December 2013. And this is the Daily Report for Gold and Silver. Definitely strong selling in the precious metals markets across the board, with gold in terms of percentage gains down about 2.5%, actually 2.80, almost 3% on the day. Current print is approximately 12.19, 12.20, puts it off about $32 on the day. We're just off the lows at 12.1730, the high 12.49, and as you can see on the 60-minute chart, we've got a virtual meltdown in the precious metals markets. We'll take a look at where we think we might see some sort of a bounce and where we're going to want to trail our stops to protect more profit on our current trade in gold. Silver also showing a nice run this morning. Absolutely evident as we look at this 204-hour Japanese average chart. You can see this utter meltdown. We are trading down to the 19s right now, low 19s, 1913 is the current print. That's off about 3.5% on the day. The low on the day is right around here, 1913, 1914 is Kitco's published low right now. The high, 19.99, just below 20 on the high. We'll talk about silver a little bit more towards the end of the show. Let's look at gold. Traders, we are looking at a 240-minute standard candlestick chart, meaning true opens, true closes. There's a couple of things that we have been talking about throughout last week. One of them, and primarily, was this triple top. We'll cover that on our 60-minute chart. We're going to pull that up in a second because that really defines this triple top here. But I draw your attention, even on a 4-hour chart, you've got 12-1 really beginning here. So the beginning of the month right in here. And this, of course, is the market as it opens in Australia. Yesterday to me, of course, Monday to those in Australia. I'm in Hawaii, the last time zone available, really. But when we take a look at this market and take a look at it through the eyes of this particular chart, meaning this duration, what you'll notice is that the body size has been growing as this market sold off. So you had a series of stops getting hit, you had technical selling. Fundamental news out there basically boosted the dollar up and brought back into contention the fact that with better numbers on the U.S. economy, we might, in fact, see the Fed taper sooner than later. I have definitive feelings on that, and I don't really feel that that's in line with what we'll see, but anything can unfold. Regardless, we're short in the market, so we're looking pretty good. Currently trading at 12.20 and change. But here's what I'm noticing. When we take a look, I really want to look at the tails that are in the market on this 240-minute chart. And the reason for that is I want to see, let's go ahead and really blow this up, but what I'm really looking to see is if the market itself closes on the lows, and then, as you can see, here is the open close. This would be an open, so the next set, it really opens. It does come back and try to backfill a little bit, but it comes in open to close, open to close. You have no real gaps in this market as this market trades lower between the low and close of the prior candle and the open and high of the next candle, and you're getting this consistent move. Now, you are getting, whether it is the market right now, the people that are short, they're pulling profits, and therefore they're offsetting their positions to offset a short. Of course, you go in and buy. You can see that the lows came in right at around, call it 12.17. So we're really only about $3 off the lows. New York has closed. We are trading in the spot market as we talk right now, and we'll begin to see what kind of reaction we get to this dramatic downfall as the market goes back to Australia. I really want to look at Hong Kong because I think that could be interesting, of course, and wraps back around the world later on today, say in the next 5 to 6 hours. Now, when we look at our 60-minute chart, and you can see the bar is not over, but this is the first really any kind of light of green in there. Let's go ahead and blow this up and move it over a little bit. But you can see this is the first bar that we have seen. We've seen a couple of little bars in which it attempted to recoup. Again, this is a very, very short-term chart. It's simply an hourly chart. But what I draw our attention to is this triple top. And we talked about this a lot last week. And it's actually reminiscent of a much larger move that we saw in the market, but nothing parabolic in the way that this market just sold straight off. Because the other triple top that I am thinking about is a triple top that you can see on a daily or weekly chart, and that was after the market had touched the record high above 1900, came back down and started getting resistance at 1800. In fact, let's go ahead and pull that up. And what I'm referring to, we're looking at a daily chart. It's in Japanese average, but that's really irrelevant because we aren't looking at this chart for candle structures as much as really support and resistance. This is the triple top that I'm speaking about. 1800, 1800, 1800. The third time was the charm because the third time it could not make it above this. That's when we began this dramatic sell-off. Of course, nothing like what we're seeing today in terms of the sheer magnitude or the strength in which it sold off. But this is the last time we've really seen any kind of a real triple top in the market on a long-term basis was back when the market was trading between, 1530 and 1800, and that would be this particular range right in here, based upon our lows and highs. And of course, what's most interesting is when it broke through the bottom of this range. I'll just try to extend this and put it up as straight as possible. When it did break through this range, you had this dramatic parabolic fall right here. Now, when we move back to our 60-minute chart, let's go ahead and move that over, we had somewhat of a range. And what we want to see is really how it reacted. We've had these series of lows right in here, and then this is our top. The market really meandered, and when it broke through this particular price point, and this particular price point is about, call it 1235, we had, look at the size of this candle just after that as that market broke through. And that's when we're seeing sell stops getting hit in the market. And you can see the dramatic fall that we had. Now, the market is recouping a little bit. I don't think that much of it. We're going to, I believe, get a bounce at some point, but we're going to have to look at some other technical studies to really define where it makes sense to see that bounce. We know that 1225 does match up historically. We'll look at how that happens on our next chart, but we'll see what kind of selling pressure comes into the market as we go to other parts of the world, meaning as it starts to trade in Hong Kong and Australia this afternoon. Traders, I draw your attention to the current chart. It is in standard candlestick format, and on this chart we have a few different Fibonacci retracements, but the one that I want to actually look at and draw our attention to is a series of two. They both start from 1180. First one goes from 1180 up to about 1435. This is 1432 is where I've got the top at. And then the secondary top right here is when the market hit just above 1345. I think it was 57 if I recall. We get a couple of numbers that come in, 1240 and then 1223.72. Market's at 1221. They're both 76% retracement levels. But the difference is where we're pegging the top on these particular retracement levels. So I want to see if any kind of support forms in this area, call it around the 1220 area, because if in fact we see the market continue lower through here, as I've said before, we really have a sincere opportunity to see this market dip not only below 1200, but possibly as low as 1180 before finding a bounce and concluding that wave 3. Because again, that would give us a wave 1 and wave 3 that are equal in size. And that's kind of where the forecast for this 1180 has been coming from, and the lower pricing has been our bear count or our Elliott wave count, which shows that we're currently in 3 out of 5, and within that 3, we'll go ahead and look at the count on another chart. Now, as I said, on a 60-minute chart, we are getting a little bit of green for the first time. All I've done is blown up the 720-minute chart that we have been looking at, And there's no doubt, 1223.72, we're trading at 1220. I currently think that, call it 1224, is going to be a level that we see either becomes a resistive area, 1225, 1224, a resistive area now rather than any kind of supportive area. And really, to make my case for that, we need to pull up some long-term studies. And as they say, be it ever so simple, we're simply looking at a weekly chart. It is in standard candlestick format. In fact, I'll go ahead and blow up these candles a little bit, but keep the scaling the same. And if you recall, I believe this is about 1 week ago, might have even been longer than that. We talked about 1225 and where that kind of fits in when we look at the big picture. And the only thing that we could really identify was if we go back to the beginning of this incredible bull run, starts at the end of 2008, concludes middle to the end of 2011, we see the market rise. We see parabolic rises throughout there. But at the point in which it was flirting with 1,000, and this is 1,000 right here, it is this very, very thin gray line just below that. First time it hits, comes back down. Second time, and then of course this is that third time as a charm. The third time it's able to break above it, break quite nicely, but it runs into some resistance. This is that top. You get a shooting star. That's a candlestick type that we identified at the top of this market before coming back down, and lo and behold, the ceiling has now become the floor. In other words, resistance, ceiling, breaks through the ceiling, comes back down, and now you find it being supportive in this area at 1,000. But this became resistance because if you look, as this market continued higher, it pretty much does that unheated until it gets to, again, this 1225. This is about 1250, if I recall, in terms of the top, comes down below it and then barrels through it. So that, to me, gives us a little bit of historical data that shows us that that particular number, meaning 1225, is fairly important. The question is now, will it become support or resistance? My sense is it will become resistance. Now, I do apologize. This show is running a little bit longer than a typical weekday show, but there's just been so much action that went on, specifically today. I felt that we really needed to spend a little bit more time to kind of cover that. Now, lastly, what I want to take a look at is our current Elliott wave count. And to do that, I'm going to pull up a daily chart. This daily chart simply has our intermediate current call, in which top of the market is 5, A, B, we get our C, we get our failed initialization of going back into the impulse phase. So we get wave 2. Here's wave 3, wave 4, and then we are now currently in wave 5. Now within wave 5, we've identified really wave 1, wave 2, and we're now in wave 3. And as I have said, for wave 3 to actually fit within what's called his 3 golden rules, and one of them is that wave 3 cannot be the shortest of any of the impulse waves. Another one is that wave 4 cannot go into the trading territory of wave 2, meaning the 2 corrective. They're really important rules. And just looking at that, the 1181 that we spoke about is really where we would see gold go to if we saw gold, this last wave in gold, being equal to our wave 1, which is right in here. Now, we will look to move our stops, trail them down within the next couple of days. They're currently sitting at 61. And the reason that 61 was important, we identified these series of tops. We're looking at a 720-minute chart again. These series of tops that came in as high as 55 and really 61. Because of that, or 55 and 57, excuse me. Because of that, I put the stop at 61, believing that it might try to take out these most recent highs, but we would need to see pretty much a hard break above this if we were going to actually get out of the bearish cycle that we have been in. And so for that reason, I still believe that there is the opportunity for us to see gold go and test 1180. I think it's more realistic now than it was last week, of course, now that the market is truly trading lower at around 12.18, 12.19 this morning. And then, of course, when we move the chart out, you can see how the rest is history. So our stop is right here. It's at 12.57. The next point that I'm going to look to move our stop to that makes some logical sense so that you can either do that on your own or you have some idea of what I'm looking to accomplish. But my sense is right now that if we get this hard break, this is about 12.41, I would feel comfortable moving the stop from 12.61 down to 12.41. If we get the continuation of this break, as I said, I think that 25 will become resistance. If 12.25 becomes resistance, 12.30 is probably where we're going to want to place our protective stop on our current trade in gold. Now, traders, just as in gold, we've identified points in which we think that if this bear trend continues and the market continues to trade under pressure, we've looked for 1180 has kind of been our target for gold. Our target for silver is 1800, and it's based upon the same kind of move in those most recent lows. When we saw 1180 gold is when we saw $18 silver. Of course, silver made a dramatic move from 18 up to almost 25. Percentage gains much, much greater than gold, but we're getting, in terms of percentage losses, the same kind of activity. We talked about 1967 as being an important point. We've broken through there, and we've broken through there with a vengeance. We're now teetering around 19 meaning a century mark. $18, $19, $20 per ounce are going to be important psychological levels. But my sense is that if we continue to see gold drift lower, we should be able to buy silver at around $18 per ounce. This has been Gary Wagner, wishing you, as always, good trading. And if the first trading day in December is any indication of what lies ahead, we should get just that. Have a great day. We'll talk to you tomorrow. Bye-bye.